Da skal vi veldig kort før panelet går I gang sette litt ting og vise en del ting som vi også har lyst til at panelet tar med ut. I will conduct the rest of the presentation in English for the benefit of those that do not understand Norwegian. There was a couple of interesting remarks by Grace and Hans Christian, and that was that country-by-country reporting and extended country-by-country reporting is not a silver bullet. And yes, it's not a silver bullet for taxes, but it was never meant to be a silver bullet for taxes. One thing that Grace mentioned was that you need to understand the business. And there is a saying that you should not look at what they say, you should look at what they do. And essentially that is what extended country-by-country reporting is about. It's about looking at what the companies are doing. And we totally agree that tax information in itself should be confidential. That is obvious, at least from my perspective. But tax is dependent on rules. And rules is dependent on that the regulating bodies have enough information to make good governance. So good governance is dependent on understanding the business, and therefore it's the information to understand the business that needs to be open. And that is why extended country-by-country reporting needs to be in a financial statement. It needs to be open, while tax information needs to be confidential. I will just briefly go through a few slides, setting a little bit background for the debate. The presentation is slightly longer. It will become available on the website, etc. But I will skip some of the slides so that we get through to the debate very fast. These are the 8 numbers that we in Norway have asked to be enacted, and that we want to see in the notes to the financial statement. The US and EU regulation is currently focusing on tax payments, and so is the 80 initiatives. But tax payments in isolation is, from our perspective, meaningless. You need to put them into a context, and it's that context that we are seeking. And interestingly, this is a comparison of the 80, who does benefit from the 80 rules, who benefits from the current country-by-country reporting in the US and EU, who can benefit from the extended country-by-country reporting, and who benefits from the project-by-project reporting. And interestingly, tax authorities is not on this list, because tax authorities needs confidential information about specifics. This is about understanding the business. And interestingly, when you compare with the current rules in the US and EU, there is a number of stakeholders that does not benefit from the existing country-by-country rules, but with an easy change from moving only to reporting tax payments and moving into reporting tax payments in the context of production, revenues, costs, and profits. Suddenly you have investors which are highly interested in the numbers. I've talked to many investor groups in Europe and other places, and they say that the extended country-by-country reporting is by far the best reporting that they can have. And the investors are the owners of the businesses. They are the ones that can put the governance on the companies. And also capital markets, they can't use 80, they can't use CBC, they can't use project by project, or at least only to a very little degree. Capital markets will benefit massively from extended country by country, The good companies will get more level playing field. The home countries' regulators will get much more information, and the world statistics will benefit tremendously from the extended country-by-country reporting. This is just an attempt to show the difference between the various initiatives. Mona mentioned what was missing in Norway. We are missing that the cost is not reported in full. We are missing that the reporting is not in notes to the accounts in the financial statements. And unlike the US and EU, in Norway we actually have exemptions. I will quickly go through the rest of the slides, and I will not go into those. I will just show, this is an example of a home country, an extractive industry which is in a home country, which is in a recess country, and which are in tax havens. And just look at what's happening when you consolidate their accounts. Essentially, the cost is replaced by the actual cost in the financial statement, but you hide through the consolidation a lot of other information. So everything on the tax havens disappears. Everything on the resource countries disappears, and actually also the cost in the home country disappears and is replaced by the actual cost. This is what is happening when you consolidate the financial statements. And again, just to make a comparison, this is what the consolidated financial statement shows. The total revenues, the actual cost, the profits, and then the taxes paid. Now, if you go for an 80 process, you will include the host country, and you will show the taxes that is paid there, and you will compare that with what the government has received. Now, compare that with the regulation that we have in Norway. We show the revenues, but we don't show the cost, and we don't show and we show the taxation, which in this example is 0. Now, compare that with the US and EU, which then adds and reveals the tax haven, but there is of course 0 taxation in the tax haven, so you don't have very much more information. And then compare that with the extended country-by-country reporting, which then fills out the entire picture. You have the revenues of all the countries, you have the cost of all the countries, you have the profit of all the countries, and you have the tax of all the countries. And this is the only complete picture that can give you understanding of the extractive industries. I think with that I will close and we'll leave it. The rest of the presentation will be available on the website. Thank you.